theme, the new India. What are the emerging themes for the next decade, as we discussed? Within that, I wanna just set the background for what's been the situation like in the last decade. And as you can see, there has been not one, not two, not three, not four, but over 10, 15 short-term hiccups in the last decade. Still, the Nifty did end up delivering over 11%. The Nifty mid cap did deliver 13%, compounding average annual growth rate in the last decade. Right? We've had financial crisis, we've had political issues, we've had the US related matters, and the recent one obviously being COVID. Believe me, it is to get a 11 to 13% compounding is not an easy task. And this is at Nifty level. Let's look at what was the situation on regarding the sectoral level. Nifty, as I said, grew 11% compounding, which means over the 10 years, it became 3x, which means if somebody had put a lakh in Nifty about 10 years back, it is worth 3 lakhs today. But what is more important is what I'm trying to highlight here is some of the sectors have grown much more, as much as 6 times, right? Which are some of those? And that's right up on your screen. Consumer durables, number 1, followed by financial services, followed by IT. And we'll be touching upon some of these in the next slide. So let's start with consumer durables. And here consumer durables means some of those discretionary expenditure. So you look at a stock like Relaxo, which has become 86 times, which means a lakh put in Relaxo about 10 years back is worth 86 lakh today. Obviously, we are assuming that a lakh was available with an investor 10 years back, which is not a small amount. We are assuming that that person would have stayed put for the last 10 years and therefore would have become 86 times. But then that is the beauty of compounding. If you do that, that is the returns one can make. That may be a lone example within consumer durables, but let's look at more durable, more relevant examples, which is possible. Let's say a Kajaria, which went up over 22 times. Let's look at V-Guard and Havels, which went up between 12 and 17 times, which means 1 लाख हमने रुपए डाले 10 साल पहले, आज उसकी वैल्यू या तो 12 लाख है या 15 लाख है या 17 lakhs, right? Whirlpool, Bata, Voltas, etc. They've all been 6-bagger, 7-bagger, 8-bagger, etc. Similar is and this is the best, and this is one of the best, sectoral this thing, which has grown at 19%. And as we saw, the overall index has grown 6 times. Amongst financial services, Bajaj Finance, the Bajaj twins obviously were the darlings. The Bajaj Finance has grown 94 times, compounding at 58% year after year for the last 10 years, right? And not, at somewhere in the middle between 8 times to 20 times were stocks like a Kotak Bank or a Cholamandalam Bank. Again, a good space to be in if one has stayed put in the last 10 years in across some of these names. And mind you, these are either large or upper mid cap names that we're talking of. If I go down the order, like a lower mid cap or a small cap, the multiplier would be much more, right? But we are just discussing more larger names because you can resonate with that, right? Let's look at IT, right? Mindtree, again a mid cap, earlier a mid cap and now almost a large cap company, had grown 27 times, Coforge 19 times. A large cap company like HCL Tech 7 times, right? So that's been the story around IT. And let's look at chemicals, because that is what has been the face of investors or the topic of discussion. Within that, obviously, Alkyl Amines, one of the stocks that we, as a disclaimer, we own in some of our clients' portfolio, is grown disproportionately at 220 times. This obviously we added about a year back. Deepak Nitrite we've been having for over 7 years now, 6 years plus. It has over the last decade delivered 94 times. Again, simply put, a lakh put 10 years back would be worth 94 lakhs today. And there have been many, many examples, right? But most of them would have still ended up delivering 40 to 50 times. Humongous money. Does the story stop there? Answer is no. Right. And therefore we continue to believe chemicals is one of the spaces to that will remain happening and be amongst those high weighted sector going forward. So the background is that there have been sectors like, the 3 or 4 we discussed. There have been themes like chemical in itself is not a very big sector, but it's more of a theme that has delivered returns, right? What's going forward, right? This is where it gets exciting. Our 4 themes for discussion today is digitalization, unicorns, e-mobility, also known as electric vehicles, and renewable energy. Let's address one by one, right? We'll spend maybe less than 10 minutes on each of these, right? And then we'll just have a quick 5-minute on our overall portfolio construct, and then we'll open for Q&A. So the first one, digitalization. What does digitalization mean, right? Digitalization simply means that we are able to market, we are able to sell, we are able to communicate with our clients through the digital medium, right? It could be 0 today, but a certain number tomorrow, right? Or it was 0 yesterday and it is a certain number today, or it could be a very high number already today, and we are even taking it further, right? So let's say we open a money control, right, to check the prices. We open a trading app to do our investments, right? We order food on Zomato. We book rides to Ola, Uber, right? We do net banking, right? All of that. We go to Amazon. We go to Netflix. All of that comes under digitalization, right? The brilliant fact that today we are talking on Zoom. Teachers are teaching on Zoom to their students, right? Yoga classes are happening, the gym classes, trainer classes are happening on this. It all means you are connecting using digital medium, right? And why is it a theme? Let's look ahead. So what is driving this is the fact that the smartphone. What do you need? What are the basic ingredients to end up having digitalization as a medium, right? Number 1, smartphones, right? Number 2, the millennial population, right? Number 3 is the internet penetration, and number 4, obviously, you need money in the pocket, right? So let's look at one by one. Smartphone penetration today is already at. We are almost at 82. We're gonna be touching 82 crores Indians very, very soon, and by that, it would be somewhere in that whatever 60+ % penetration. If you look at some of the forecast, we are talking of 90% penetration of smartphones by 2023. That may be a slight aggressive, but if not 2023, by 2024, max 2025, 90% of Indians will have smartphones, right? And by smartphones, again, it could be a $3,000 phone, it could be a $30,000 phone. At the end of the day, it just needs to have the basic features, including internet. The Gen Z and the millennial population, India, you see in the green bar is right on the front. 65% of Indian population is the millennial population. What does that mean? It means people who are between the age of 25 to 45 years of age, which means they are the ones who are earning money, who are going out, who are spending, who are exposed to the various social media platforms, right? And who is the next the big driver. So a guy 25 years age now, and over the next 10 years, he would be spending, by the time he's 35, he'll spend X amount of money. A guy who's 35 will spend what Y amount of money. Guy who's already at 40, next 10 years, he'll be spending about Z amount of money, right? That's where the creme la de creme is of India today. Internet penetration, again, very important to highlight. We are already closer to 50% today, right? Which is about 80 odd crores, and it is increasing very, very rapidly and should be closer to 70% by 2023. The related fact is that tier 2 cities contribution or the share to overall shopping in India was 36% till about 5 years back, right? Today it is 53%, right? And going ahead, what it means is it could be anywhere between 70 to 80%, right? Or even more. What it largely says is, or it means is that somebody in Mumbai or somebody in Nagpur, right? Or somebody in downtown Kolhapur or even in tier 3 town would have access, right, to all the goods and services at the same price, right? On the same terms and conditions. So as long as they have money, as long as they have a smartphone, as long as they are able to push that button where they say, I want this, the good or the service will be delivered. That's the larger point we are trying to make here. We had discussed in one of our earlier webinars that in the last sale, Amazon was able to deliver to as much as 99% of India's pin code. So that talks about the reach that this space here is. Some of the examples, this is again grounds up. We've gone really, we've digged right into the transcripts, the recordings, the interviews, spoken to some of the managements and taken out this information, which we are presenting it to you. Right. So let me explain it to you in a layman term. Shoppers stock pre-COVID digital sales stroke communication was 2%. Today it is 6%. Right. Page Industries, the manufacturer of the famous brand Jockey, was having 4% sales through digital medium. Today it is 8%. Right. What it means is if somebody was buying athleisure wear of Jockey, if it was 4 out of 100 customers earlier, which is a year and a half back, today 8 out of 100 customers, they are getting it digitally, which means they are pressing a button and they get that product delivered to their house. That's the reach of digital. Even a space like Titan, they are also getting inquiries, and they are also able to do sales online as much as 3% of their overall sales. Obviously, there is a bit of omni involved because to get that, you obviously need to visit the store to take it home once you do that purchase. Bata, once it was said that Bata is probably not catching up as fast as some of the other larger brands, but you see over the last year and a half, their sales over digital medium has increased from 3 to 4% to as much as 10 to 15%. Same is with Maruti. iSure, they've been having tremendous bookings, inquiries, website visits, over the digital medium. Okay, this is where I wanted to highlight, which I said that it is all starting from scratch, right? Let's say ICICI Bank personal loans, earlier they were able to close 60% online through digital. Today it's as much as 90%. Right? Credit cards earlier was 44%. Today they are doing 75% of their sales online. Right? Similar is the case with SBI. Their digital transaction share has moved up 59 to 67%. Angel broking, the broking revenue is increased from 65 to the non-traditional, which is a digital broking revenue, is increased from 65 to 83%. Same is with HDFC mutual funds. The share is gone up. SBI Life Insurance, right? 71% premium digitally collected earlier. Renewable premium today is as much as 90%, right? Huge. That's a big jump. I see a lot of participants raising hands. I'll request them to drop in their questions in the chat box, and we would endeavor to take up most of them at the end of this discussion. So drop it in the chat box. That's how we would be ending up taking up questions. We'll club it and address it collectively after another 40 minutes. Hindustan Unilever, so including an FMCG like a lever, including a alcohol bravery brand like Radico, Dabur, Jubilant, right? Jubilant, obviously, online delivery was 85%. This is obviously non-dine-in, right? Dine-in is excluded from here. So non-dine-in was as much as 85% being ordered digitally. Today it's 99%. What's it balance 1%? 1% is still happening on the phone, right? Voltas is selling as much as 6% of their sales digitally. And surprise, surprise, there are real estate companies who are able to do a video session with their potential clients, show the sample flat over a video stroke whatever medium, and they have been able to close a lot of bookings like that. And Godrej Properties has done that during the pandemic times. So that's the beauty of being available, the medium of digital. So this is the first case study, which is what I wanted to show how e-tailing. What is e-tailing? Which means you are doing purchase of a mobile or an electronics or a fashion, grocery, home furniture, etc., over the electronic medium, right? Instead of retail, it is e-tail, right? It's just that you, instead of ending up in a brick and mortar store, you're doing that purchase online, right? The point I'm trying to highlight is this space has grown at over 30% year after year for the last many years. Over the next 5 years as well, this space will continue to grow at 30% or more. What it will end up doing is that the online share of these products, if it was 3% pre-pandemic, today it is 5%, and somewhere in 2025 it would be as much as 11%. These are again expert estimates, I mean, we could be more likely, a very high probability we'll be surprised on the positive side. By that I mean 11% could very well be or 15%, right? Within, so as we discussed, there were certain categories, which is use of mobile electronics, etc. Within that, there's a category called grocery. I'm just highlighting grocery. Today, grocery, the mom and pop shops contribute about 90% of the overall grocery market, right? The e-grocery contribution is only 3%, right? And the organized brick and mortar shops like a Reliance Retail or a DMart or a Big Bazaar or Spencer, that's about 7%. Now, this e-grocery segment is expected to grow 50% or more, compounding over the next 5 years, right? And therefore, its share is going to be in double digit, mid to high double digit by 2025, right? Just example, we have shared of US. You look at the right graph. US pre-pandemic online grocery purchase was 3%, 3.5%. It was expected to be 4.5%, but because of the pandemic, because of more people going digital, doing shopping online, it is as much as 10%. Just that big event or the catastrophe or the pandemic has forced that transition that was supposed to happen over let's say 4 years. It has happened in just 1 year, right? That's the power of digitalization. Okay, to conclude, what we're trying to say here is that the formal economy is now getting a boost, right? And obviously that's a key enabler for the $5 trillion GDP and the $10 trillion GDP that we're talking about. That's point number one. Point number two is that the tier 1 and the tier 2 and the tier 3 consumers are now having same access to the products and services, right? And there is hardly any disparity, right? I mean, for a high-end watch, right? A high-end a health gadget, right? High-end smartphone could be ordered by a tier 3 consumer, as long as he has money in the pocket, he wants to spend, he has a smartphone, and he has internet penetration, right? Number 3, now the businesses have the strong channel to now reach out to the end consumers, which was not available till a couple of years back. And what it also means is now you can experiment, right? Now the cost of operations has gone down. Therefore, you can innovate with your existing product basket, or you can launch new products altogether. That's some of the things that we want to highlight here.